Plug Power, trading under the ticker PLUG, is currently at $3.585, reflecting a significant intraday drop of 7.36%. This sharp decline might seem alarming, but the real story is far more complex than a single day's trading activity. The immediate expectation is that negative sentiment is driving the stock down, but the reality is that a major financial maneuver is currently underway that could redefine the company's future. Just today, Plug Power announced a warrant inducement agreement with an institutional investor, raising approximately $370 million in gross proceeds. This isn't just a minor cash infusion, it's a strategic move to shore up the balance sheet and accelerate growth initiatives. This development, which may not be immediately obvious to the casual observer, creates a fascinating tension between the short-term price action and the long-term strategic positioning of the company. The common belief surrounding Plug Power is that it's a high-risk, high-reward play in the burgeoning green hydrogen sector. This is a company that has been a poster child for the promise of a hydrogen-powered future, attracting a loyal following of retail investors and the attention of major players like Amazon and Walmart. The expectation is that as the world transitions to cleaner energy sources, Plug Power will be a primary beneficiary. However, the reality is that the path to profitability has been fraught with challenges, including significant cash burn, supply chain disruptions, and intense competition. While the long-term vision is compelling, the day-to-day operational and financial realities present a more nuanced picture. This is where a deeper analysis becomes crucial, moving beyond the headlines and into the intricate details of the company's performance and prospects. Investors considering an online investment in Plug Power, perhaps through platforms like Robinhood or SoFi, need to understand this dynamic. Self-investing requires a grasp of these underlying complexities, and using investment help from sources that provide in-depth analysis is key to making informed decisions. Many investors utilize individual brokerage accounts through Fidelity or Interactive Brokers to manage their portfolios, including holdings in volatile stocks like PLUG. Recent stock movement has been a roller coaster, to say the least. The significant trading volume we're seeing today, already approaching 100 million shares, is indicative of the intense interest and debate surrounding the stock. This isn't just a quiet day on the market for Plug Power, it's a battle between bulls and bears, with the recent warrant agreement adding a new layer to the narrative. The intraday low of $3.52 suggests that sellers are active, but the fact that the price has bounced back from that low indicates that there are also buyers who see this as an opportunity. This is the kind of volatility that can be both exhilarating and terrifying for investors, and it underscores the importance of a well-thought-out investment strategy. Looking at the broader trend, the stock has seen a significant run-up in recent weeks, driven by a series of positive announcements and a general sense of optimism about the hydrogen sector. The delivery of the first electrolyzer for the 100-megawatt green hydrogen project at Galp's refinery in Sines, Portugal, was a major milestone, demonstrating the company's ability to execute on large-scale international projects. This, combined with the expansion of its partnership with Allied Green Ammonia for a 2-gigawatt electrolyzer deal in Uzbekistan, has painted a picture of a company with a rapidly growing order book and a clear path to becoming a global leader in the hydrogen space. The market's reaction to these developments has been overwhelmingly positive, but the recent pullback suggests that some investors are taking profits or becoming more cautious in the face of the company's ongoing financial challenges. The high short interest in the stock, which remains above 30%, is a clear indication that there is a significant contingent of investors who are betting against the company. This creates a tinderbox-like situation where any positive news can trigger a short squeeze, leading to rapid price appreciation. Conversely, any negative news can be amplified by the short sellers, leading to a sharp decline. This is a key factor that anyone considering an investment in Plug Power needs to be aware of. The stock's performance is not just about the company's fundamentals, it's also about the complex interplay between long and short investors, a dynamic that can lead to extreme price swings. Plug Power is a company that is at the forefront of the transition to a green hydrogen economy. Its business is built around providing end-to-end hydrogen solutions, from the production of green hydrogen, using its proprietary electrolyzer technology, to the fuel cells that power everything from forklifts to data centers. The company's vision is to create a complete hydrogen ecosystem, and it has been aggressively investing to build out its capabilities in all aspects of the hydrogen value chain. This includes the construction of green hydrogen production plants, the development of advanced fuel cell technologies, and the expansion of its global sales and service network. The company's customer list is impressive, with major corporations like Amazon, Walmart, and Home Depot using its fuel cell solutions to power their material handling fleets. These relationships provide a stable revenue base and a strong validation of the company's technology. However, the company's financial performance has been a source of concern for investors. While revenue has been growing, the company has yet to achieve profitability, and its cash burn has been a persistent issue. The recent warrant agreement is a clear attempt to address these concerns, providing the company with the financial flexibility it needs to continue to invest in its growth initiatives. The company's management has set a goal of achieving gross margin breakeven in the fourth quarter of 2025, a target that, if achieved, would be a major turning point for the company. The path to profitability is not without its challenges, but the company's recent progress in improving its gross margins and reducing its cash burn is a positive sign. The upcoming earnings report on November 11, 2025 will be a key event for the company, providing investors with an update on its progress towards its financial goals. The consensus EPS forecast for the quarter is -$0.13, a significant improvement from the -$0.25 reported in the same quarter last year. A beat on this number, combined with positive guidance for the future, could be a major catalyst for the stock. Looking to the future, the outlook for Plug Power is a tale of two competing narratives. On one hand, the company is perfectly positioned to capitalize on the massive growth potential of the green hydrogen market. The global push to decarbonize is creating unprecedented demand for clean energy solutions, and hydrogen is expected to play a key role in this transition. The fuel cell market is projected to grow at a CAGR of over 20% in the coming years, and Plug Power, as a leading player in the industry, is well positioned to capture a significant share of this growth. The company's recent large-scale deals with Fortescue and Allied Green Ammonia are a testament to its ability to win major contracts, and its technology is widely recognized as being among the best in the industry. The recent warrant agreement, while dilutive in the short term, provides the company with the capital it needs to execute on its ambitious growth plans. The potential for an additional $1.4 billion in gross proceeds if the new warrants are fully exercised would be a major boon for the company, providing it with a war chest to invest in new technologies, expand its manufacturing capacity, and enter new markets. However, there are also significant risks to consider. The company's path to profitability is not guaranteed, and any setbacks could be punished by the market. The high short interest in the stock is a constant threat, and any negative news could trigger a sharp sell-off. The competitive landscape is also becoming more crowded, with established industrial giants and nimble startups all vying for a piece of the hydrogen pie. Plug Power will need to continue to innovate and execute flawlessly to maintain its leadership position. The analysis community is divided on the stock, with a consensus rating of hold. While some analysts see significant upside potential, others are more cautious, citing the company's financial challenges and the inherent risks of the hydrogen industry. The average one-year price target is $2.58, which is significantly below the current trading price. This suggests that Wall Street is not yet fully convinced of the company's long-term prospects. However, it's worth noting that there is a wide range of price targets, from a low of $1.76 to a high of $7.35, reflecting the high degree of uncertainty surrounding the stock. Now for a question to our viewers, with the global push towards decarbonization, what other green energy stocks are on your radar? Comment below and let us know which companies you believe are poised for significant growth in the coming years. Your insights could help other investors identify promising opportunities in this rapidly evolving sector. In conclusion, the story of Plug Power is a classic example of the tension between expectation and reality. The expectation is that the company will be a major winner in the green energy transition, a high-growth stock that will deliver massive returns for investors. The reality is that the company is still in the early stages of its development, facing significant financial and operational challenges. The recent stock price action reflects this tension, with bulls and bears battling for control. The recent warrant agreement is a key development, providing the company with the capital it needs to pursue its growth ambitions. However, it also highlights the company's ongoing need for external funding. Ultimately, the success of Plug Power will depend on its ability to execute on its strategy, achieve profitability, and fend off the competition. The road ahead will likely be volatile, with plenty of ups and downs along the way. But for investors who are willing to take on the risk, the potential rewards could be substantial. The key is to do your own research, understand the risks involved, and make informed decisions. Whether you're using a platform like Robinhood, SoFi, or Interactive Brokers, or working with a full-service brokerage like Fidelity, the principles of sound investing remain the same. The journey of Plug Power is a compelling one, and it will be fascinating to see how it unfolds in the months and years to come.